Hey everybody, Matthew Cole with West Shore Mortgage here in Sacramento. Today I wanted to talk about private mortgage insurance and why when you work with us, it's not that painful. Private mortgage insurance, also known as PMI. This is a payment that you're gonna add into your loan when you're not putting 20% down. Unfortunately, not a lot of people in this world can have the money to put 20% down, and a good majority of buyers are stuck with paying PMI. PMI is one of those things that what it does is it doesn't help you one bit. Obviously with putting less money is the only thing, but what it does is that it ensures the lender that if you were to default on your loan, they're gonna be insured up to a certain percentage of what you default to. So your private mortgage insurance is gonna be based off of a few things. How much money you're putting down percentage-wise, 3, 5, 10, 15%. It's also gonna depend upon your credit score. Hopefully it's a higher credit score. If it's not, PMI is graded strictly on risk factor. So the lower your credit score, the higher the payment will be. FHA loans, no matter what, are gonna have mortgage insurance. So they're ideal to get into with the low down, but you wanna try to get out of the FHA loan quickly because that mortgage insurance will stay on the life of the loan. Even if you have 50% equity and your value's tripled or doubled or whatever, you're still gonna have mortgage insurance. So you wanna try to get out of the FHA loan and into a conventional loan because the mortgage insurance on a conventional loan does go away when you have that 20% equity. Always check with the mortgage servicer or loan officer on the exact terms of that because it does vary amongst companies. The good news is that if you have conventional financing, you don't have to refinance your loan just to drop the mortgage insurance. Now, if the rates are extremely lower than when you buy your house, then that's a good reason to probably refinance. But if the rates are the same or worse, the good news is that all you need is that equity built to 20% so that you could drop your PMI completely off your loan. There are a few loans out there that have no or very low PMI. VA loan, no PMI, awesome. USDA loan, you gotta live in the boonies, but extremely low PMI. So 100% financing options between the two of those. If you're a veteran, awesome loan, thank you for your service, and you deserve every bit of that amazing loan. USDA loans, you gotta find a spot that's kind of in the cuts. There is a specific map that allows us to check if the property is USDA eligible, but the mortgage insurance on USDA loan is a very, very low amount, and it's usually 0.3% of your loan amount, so extremely low. If you have any questions about mortgage insurance, or if you have PMI on your loan, you want to know how you could drop it, lower it, get a better deal, reach out. You can always hit me up below, but I'll look forward to helping saving you money.